Lasser. He's UBS's broadline and hardline retail analyst. He has a buy rating on Home Depot stock. His price target is 380. All right, give us your take on the quarter. First off, Michael.
Morning, David. And those 12-foot skeletons are pretty scary. But our take on the quarter was threefold. Number one, sales were about as what the market were expecting, an indicating that the home improvement cycle is normalizing. Two, Home Depot's managing effectively its profitability. It's on pace to be 14.1% to 14.2%. That's its operating margin by the end of this year, which is consistent with where it was prior to the pandemic and is probably a level that it can sustain for the foreseeable future. And third, this is a stock that's going to have a considerable amount of upside as we get to the other side of the cycle. It's just a levered play on an eventual improvement in the consumer, rates coming down, and healthy home improvement spending trends. So we like the stock here.
You know, they seem to be lowering numbers into the quarter. There are some who said they're beating a lowered bar. The commentary is not particularly strong. Was it on the call in terms of where the consumer stands right now? I guess I'd just like you to weigh in terms of, you know, obviously the stock is reflecting positive thoughts, but sort of weigh in on that side of things.
So number one, the stock's reflecting the fact that the 10-year is under 4.5% right now, and it just shows the amount of torque that home improvement and Home Depot specifically is going to have as we do see rates come down. As far as what's happening with the consumer has clearly weakened in the last 6 weeks. Despite that, Home Depot saw pretty consistent trends throughout the quarter, which is encouraging and shows the consumers still relatively well engaged within home improvement. You know, it's probably best to expect that this normalization cycle of demand being pulled forward, a lot of projects being done over the last couple of years, that's going to persist into the first half of next year, especially as the unemployment rate continues to climb and the labor market weakens. But one thing to keep in mind, David, is right now existing home sales, which are at trough levels of around 4 million units. That's on par with where it was in 2008, despite the fact that we have 20 million additional housing units in this country. Eventually, these people are going to move, and that's going to facilitate home improvement demand, and Home Depot will benefit.
Yeah, I mean, I was actually just going to bring up the existing home sales in September at the lowest seasonally adjusted annualized rate in 13 years. So you took the words out of my mouth, Michael. So how correlated is the spending at Home Depot? And this is not an original question, but with numbers like that.
Yeah, it's an important question, though. Housing turnover is critical in certain big ticket categories where there will be some disruption to the residents, like flooring, cabinets, countertops. These are projects that are going to be done more likely when someone's moving into or out of a home. For now, what's happening is consumers are doing smaller projects in lieu of those bigger ticket purchases. They will continue to do that in the short run. And then when we see an improvement in housing turnover, because rates are so high and consumers are locked into rates that are so low, but eventually that will normalize and Home Depot will see a nice lift as that normalization process occurs.